Good morning, traders, and welcome back to today's daily analysis. Starting with the US dollar, rose on Wednesday after the release of the August inflation data. Although the overall inflation dropped, the core inflation rose slightly. However, the US Japan yen fell after comments from the Japan Central Bank, reaching 1 for 1.80. The market is focused on the inflation this week, and some believe expectations for the aggressive Fed rate cuts may be exaggerated. A 25 basis point rate cuts seems likely, but falling US Treasury yield could signal more US weakness if the dollar grows. Technically, the US dollar is in recovery, reclaiming its key 101 level. Buyers need to hold above this for further gains, with key support at 101.66 and 102. A drop below could see a move towards 100. And then for the crude oil prices are trying to hold on to gains from Wednesday, rising nearly 1%. This comes after the rough September with losses near 10%, and WTI crude hitting its lowest point since May. The oil has dropped 8% over 2 weeks, the biggest decline in almost a year. The recent slump is raising concerns about the weak global demand and slow economic growth, with some seeing it as a reason for potential 50 basis point rate cut. If the global economic conditions worsen, riskier assets like oil could see even more selling, especially with the negative data from China adding to the cautious mood. Technically, the WTI crude is down 17% short term. If the prices keep falling, they could breach $65 or even $60. On the upside, the key levels to watch are 68.50 and 69, with 70 being a major resistance. If the bulls push past this point, the next target is 71.25. On the downside, 64.75 is the key support, with 64.38 and 62.34 as a further level if the prices continues to drop. And then the gold prices reach a high of after release of the inflation data on Wednesday, but pulled back to 2,510. The rise in the 10-year US Treasury yield and the stronger than expected core inflation report weighed on the gold. Despite this, gold saw some buyings for the third straight days, hitting a 1 week high around $2,520 during the Asian session trading. The possibility about the Fed Reserve starting the easing policy cycle didn't boost the dollar, which is generally positive for the gold. The cautious market sentiment also suggests supported the metal as stocks remain weak. From a technical standpoint, gold is facing resistance at the 2525 to 2526 level, which has been a key area for weeks. A strong move above this could trigger further gains, possibly to its historical peak of 2531.70. The 14-day RSI remains in a positive zone, suggesting uptrend may continue, with 2550 as the next target. On the downside, 2500 serves as a key support, followed by 2485 and 2470. If these levels break, gold could see more selling, with the 50 days moving average around 2450 acting as the next major support. And that is all for today's daily analysis. Thank you for watching.